What's up, y'all? My name's Dave. I'm a financial advisor. I'm here to help you secure your future financial stability and therefore your freedom to live your life. Quick disclaimer, this is free financial advice. Please follow it at your own discretion and don't sue me. Thank you. So today I'm going to be showing you the two best investments for everyday investors. Why are they the best? Because they're simple and they're backed by decades of historical data, right? Have you ever looked into investment recommendations and just gotten overwhelmed by how much information is out there? There's thousands of options and it is so easy to lose money following narrative-based recommendations that seem completely plausible but fall apart in real life. So I like to keep it simple, right? Just two investments that you can buy and sit on for decades. That's right, decades, with confidence that you will be continuing to make money that entire time. Both of these investments are exchange traded funds or ETFs. If you haven't heard of that before, it sounds a little scary, but all it is a package of different stocks, right? They're creating the package, putting all the stocks in there, and then selling the package for you. Why packages and not individual stocks? Well, first, because it offers easy diversification. What's diversification? It's basically just not putting all of your eggs in one basket, right? So we're buying only one investment with, hundreds of companies in there. So our eggs are across hundreds of baskets rather than one individual company. And the other reason I like packages instead of individual stocks is because it's simple. It doesn't require any research on our part to figure out whether a company is undervalued or overvalued or whether their new CEO is an idiot or blah, 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 right? I like to choose packages that have been historically proven to make us money and just make the whole investing experience that much more simple. Um, Without further ado, let's get into the investments. Its ticker symbol, or its symbol, its shorthand, is VOO. It's called the S&P 500 ETF. Why 500? Because it's a package of the 500 biggest companies in America. And once we load it up, since it was created in 1974, this investment, the S&P 500, would have turned 10K, let's see, into $1.4 million, right? Which is crazy that someone, 40 years ago, 45, could have put in $10,000 into an investment account, bought the S&P 500, forgot that the account existed, did nothing for the next 45 years, and then end up with 1.4 million when they found their account again. So why do I like the 500 biggest companies in America as opposed to, let's say, the small companies or the mid-sized companies? It's entirely based on historical data. Um, the Russell 2000 is 2,000 small companies, and this isn't fair because it hasn't been in existence for the same amount of time. So if I just look at the previous 10 years, where they both started at 10K, in those 10 years, the big companies in blue, the S&P 500, did better than the small companies. So I like to do big companies. If we take a look at mid-sized companies, the big companies in blue still do better. So I just stick with the big companies in blue because I personally have a lot more long-term confidence in Apple, Tesla, Google, Amazon, whatnot to continue making money and do well than I do in a bunch of small and mid-sized companies that I've never heard of before. So that combined with the fact that historically the larger size companies just have made more money in the stock market leads me to recommend the bigger companies. The other reason I really like this investment in particular is because it's backed by Warren Buffett. If you don't know who Warren Buffett is, he's basically the godfather of the modern investor. And made a bet that this investment, the S&P 500, could beat any 5 hedge funds. A hedge fund is just a professional money manager. So that's someone whose entire job all day is to pick and choose stocks, and they get paid very well for it, right? So he said this investment, the S&P 500, which is just an algorithm including the 500 biggest companies in America, right? A little bit more complicated than that, but basically just 500 biggest companies get included into this package. He said this investment would beat any 5 professional money managers over a period of 10 years. And if you want to figure out why he stipulated a period of 10 years and not any shorter period, then I encourage you to click the link above and watch the video on the investing strategy I recommend to be paired with these investments. That being said, he said that this one investment could beat 5 professional money managers over a period of 10 years. And someone took him up on the bet, right? Not only did this investment beat the aggregate of those 5 professional money managers, again, whose entire job is to sit and pick and sell stocks, not only did it beat the aggregate of them over the 10 years, it beat every single one of them over the 10 years and beat every single one of them in 9 of those 10 years. So at some point, you got to ask, what are we paying them to do, right? If I can hold one investment that is going to have, 5 to 10 times lower fees than these professional money managers, and research has shown that this investment beats 85% of those money managers, then what am I paying them for, right? I'd rather just choose this investment and save as much money as possible, and by saving as much money as possible, have as much money as possible growing for me, right? And not paying their crazy wages. And the second investment I like to recommend, very similar to the S&P 500, it's called the NASDAQ. Its symbol is QQQ. As you can see, the NASDAQ's done better than the S&P 500. So what is it? The NASDAQ is basically the same as the S&P 500, except it's fewer companies and it's more tech focused, right? So there's still a lot of Amazon, Apple, Google in this investment, but they are an even larger percentage of the package than in the S&P 500. And over the past 20 years, the technology sector has outperformed the rest of the economy. And so the NASDAQ, which is technology focused, has done better than the S&P 500, which can be thought of as the American economy at large, right? And I feel pretty confident making the bet that technology will continue to do better than the rest of the economy moving forward, right? Amazon, Apple, Google are fundamentally strong businesses, right? There's also this incoming AI hype. If you check the description to see when I uploaded this, I'm very curious to see where it goes. But I think all this AI hype is going to be really, really good for these technology companies. And so I feel confident continuing to make a bet on the technology sector while keeping my bet on the technology sector in these huge companies with really good financials that have been making money for the past decade and will be continuing to make money for the next decade. So these 2 investments, as you can see, if you had invested 10K in both of them 10 years ago, as of today, June 29th, 2023, you would have made $87,000, right? You would have literally 4x, almost 5x your investment if you'd held it for just 10 years, right? And that's why I like them. They have decades of data behind them and require nothing more from you but simply to buy and hold on to them. Again, the key is to buy and hold. I highly recommend you watch my investing strategy video, which you can find in the description in the Linktree, in order to fully understand how to invest, right? Because choosing the right investments, which is this video, is just half the battle. If you don't have the right strategy, I guarantee you will end up shooting yourself in the foot, and in that video, I'll explain how. But that's everything for today. I hope you enjoyed the video. Check the description below for the link tree with the rest of my YouTube videos if you want to receive updated financial advice relevant to the stock market today. Then fill out the Google form in the description and mark that you want to be added to my newsletter. If you want free personalized financial advice, then fill out that same Google form and add me to your investment account as a view-only role. That's going to allow me to see but not actually do anything with your account, so I can give you free personalized financial advice. If you're unsure how to add me as an authorized viewer, then call the customer support phone number for the brokerage firm you opened your account with, and they'll be happy to help you. You may be wondering, why am I offering investment advice for free? Well, in 20 years, when you've made your money from this free financial advice and you're looking for a financial advisor to give you more comprehensive assistance, then I want to be the first person you think of, and I look forward to embarking on that journey with you. But that's everything from me. Congrats on starting your journey towards your financial freedom, and I'll see you next time.